Earnings conference call of Venky's India Limited, hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Probal Sen from ICICI Securities Limited. Thank you, and over to you, sir.
Thank you, Pooja. I welcome all of you and appreciate the time taken to attend this Q4FY25 and FY25 result call of Venky's. With us, we have the distinguished management from the company, including Mr. J.K. Handa, who's the CFO, Mr. Rohan Bhargava, the company secretary, and the leaders from the respective segments, Mr. M.K. Toshniwal from the oil seed segment, Mr. Dr. Vijay Tejare and Dr. P.G. Pedgaonkar from the poultry segment, and Mr. Deepak Khosla from the AHP segment to handle the call from the management side. Without further ado, I'll hand over to the management for the opening remarks, and then we can get into the Q&A. Sir, over to you.
Thank you, Mr. Probal Sen. A very good afternoon, and thank you all for joining us today for the conference call of Venky's India Limited. The company had published financial results for the quarter and year ended 31st March 25, along with the information for investors on 12th May. I hope you all have gone through the same. Today we have with us the unit heads to answer all your queries in respect of their respective segments and the area of operations. Before we start discussing the company's performance, I would like to mention that some statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. After the end of this call, in case you have any further questions, please feel free to reach out to the investor relations team. I will now hand over the call to Mr. Jeevan Handa, our CFO, to make the opening comments. Over to you, Mr. Handa.
Good afternoon and a very warm welcome to all our shareholders and investors. I am Jeevan Handa, CFO. We are meeting today to discuss on the Venky's earnings call for the quarter ended March 25, quarter and year ended March 25. I hope you have gone through the audited results and also the detailed information to investors. For the quarter ended March 25, the company's financial performance was affected mainly due to the unexpected fall in the profit margins of the poultry and poultry product segment. Sales turnover of this segment was on the expected lines. However, profit margins were affected, which was mainly due to Kumbh Mela, which was lasted for 30 to 45 days in the northern region, wherein major operation of the company is located. The animal health product segment has registered satisfactory performance. Performance of oil seed segment has started showing improvement. For the year as a whole, the performance is somewhat satisfactory. But for the fourth quarter, the overall financial performance would have been better, far better as compared to March 24. As on 31st March 25, the cash and cash equivalent is rupees 16.75 crore against last year of 18.83 crore. Company's debt position is of rupees 165.14 crore, whereas the last year it was 167.51 crore. With this briefing, our senior management team is available here to answer all your questions. You may go ahead with the questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Viraj Mehta from Enigma Investments. Please go ahead.
Yeah, hi sir. Sir, can you tell us what was the average realization for broiler and DOC for this quarter vis-a-vis what was it last quarter and the same quarter last year?
Yeah. With regard to broiler bird realization, if we compare Q4 of 24-25, the broiler bird realization was close to 78 rupees per kg as against 87 rupees of Q4 24. With regard to chick realization, it was 39 rupees for Q4 25 as against 35 of Q4 24.
Right. And sir, as far as right now the summer has started and we have seen improvement in pricing. So can you tell us what is the trend right now?
With regard to the trend of Q1, or rather I can say for the month of April, which has recently, we have completed April, the realization for broiler bird was not satisfactory because of various reasons. One of the reasons was there was a panic sale because of some mortality or heat waves also. So the realization overall reported for the month of April was to the tune of 80 to 81 rupees, and the chick realization was close to 38 rupees for the month of April.
Right, sir. And sir, at these realizations, what is happening is that we are not making satisfactory margins or we are not making money. And this is in spite of lack of DOC in the market, at least over last 6 to 8 months, which has led to lower production of both DOC and broiler birds. And even in that scenario, the industry leader like yourself is not able to make satisfactory numbers. So under what scenario will we make money?
With regard to this question, we would like to analyze some past figures. We have seen that in past few years, there is a consistent growth of poultry with regard to overall placement as well as production. At the same time, the productivity of bird has reached to the extremely high level. So the earlier results, which was evident on 40 days, we were getting 2.2 kg. Now at the age of 40 days, we are getting 2.5 kg. So there is increase in productivity which is contributing to the tune of 8 to 10%, in addition to the normal growth of industry of 7 to 8%. Because of which, sometimes there is an additional production on account of extremely high productivity. At the same time, we have some patches of consumption. So we have a Q2 and Q3 sometimes adding to the lower consumption. At the same time, production cannot be altered to a great extent matching to the consumption level. So when such thing happens, definitely the hit is taken by realization. So these are some of the facts with regard to poultry, and we are witnessing the same in terms of when we are analyzing the results. As we rightly said that because of Kumbh Mela, when we hit the consumption, so production could not be altered to great extent because already the cycle is in place. The breeders are in farm, so definitely the production cannot be kept on a suspended level at that point of time.
Right. And sir, we saw anti-dumping duty on oils in October, November, due to which the prices has gone up. But our profitability has only slightly improved QOQ in oil segment. Shouldn't we as a company should have seen much higher improvement in oil price, oil profitability?
No, actually what has happened, it has not been anti-dumping duty. The government, which was levying the 0% duty on edible oil, they increased the rate because the farmers for the local oil seeds were not getting remunerative prices. In fact, the MSP prices have gone below almost 20% below than the government declared MSP prices. So they were desperate by the government and they started procurement of the seeds through NAFED. In fact, you can say that almost 25% of the total crop is being holded by NAFED as on today. And another thing that happened so that is the first time in many years the soya oil prices have gone down below palm oil prices. Because the soya imports had gone up and because biodiesel diversion in Indonesia, the palm oil has not come down as expected. Now I think last 1 month the things have stabilized. Everything is stabilized, and we are seeing the difference in the first month itself. Now we hope even better things to happen in the coming days. Thank you.
Right, sir. I'll come back in the queue. Thank you.
Thank you. We'll take our next question from the line of Keshav Garg from Counter Cyclic Investment. Please go ahead.
Sir, please tell us the per kg cost of maize and soya for Q4.
The cost of maize for Q4 24-25 was 24 rupees 50 paisa for maize, and with regard to Q4 24, the maize price was 23 rupees 50 paisa.
Okay.
With regard to soya, the soya price that I am talking is a DOC price. 24-25, soya price was 31 rupees 20 paisa per kg for Q4 25, and for Q4 24, the soya price was 44 rupees 30 paisa per kg.
Sir, and for full year, if you could tell us maize price, soya price, broiler realization, DOC realization for full year FY25 year on year.
Sure. For FY25, the maize price was 25 rupees 50 paisa. Soya price for FY25 was 37 rupees 90 paisa. With regard to broiler realization, it was ranging from 88 rupees to 91 rupees. For 24 full year, maize price was 22 rupees 80 paisa, soya price was 47 rupees 55 paisa, and broiler bird price was 87 rupees to 88 rupees per kg.
Sir, and DOC?
DOC price, chick price for FY25 was 38.54, and DOC price for FY24 was 30 rupees 70 paisa.
Sir, now our main hit has come, if we see the last few years, more than poultry, the hit that we have seen is coming from the oilseed division, wherein if we see then from a peak revenue of around 2,600, it has less than half to 1,100. And similarly, the EBITDA, PBIT has fallen from 134 crore to 19 crore over the past 3 years, which is the lowest since 2015. Sir, so, and even though the poultry segment has bounced back somewhat over the past 2 years, the soya profitability has kept on falling. Now, sir, this is, I assume, due to the ethanol blending from maize, which produces a byproduct known as DDGS, which is a substitute for DOC. Basically, de-oiled cake from soya that we were selling to the feed industry, and since DDGS is far cheaper, so that is why the DOC prices have fallen. Now, sir, since this trend is not going to reverse, like ethanol blending from maize is expected to continue, so, sir, then, I mean, what are the plans for our oilseed division? Because this is not a one-off. DDGS is here to stay.
Yes, you see, regarding the profitability and turnover, one thing that it has been substantially the worst. Rates have come down almost by 30 to 35% of the commodity itself. Soya seed, which has gone up to the 70 to 80 rupees at one point of time, now it is around 42 to 45 rupees. So that value-wise, it has come down. Number two, what has happened, this is a commodity business. The most of the profit comes because we are a cash-rich company, so most of the profit comes from the speculative business. When we hold the inventory or when we buy the goods in the season and process it in the off-season, that's the time it gives a lot of profit, which, because the prices have been very low last 2 years and there has been no reason to store the material, hence that segment has taken a hit, number one. Number two, because the MSP price has been ruling almost 20% below, the government intervention has been quite, at times, which has been created the instability in the markets. Number one, that soya DOC export prices have not gone up. Number two, they have imposed the oil duties, so the soya oil prices had come down first time in compared to the palm oil. Now these kind of all uncertainties are over. Now things have stabilized. People have to accept DDGS also, and we have enough market for the soybean also, because soybean has gotten a better availability of a protein, better availability of a digestibility. Hence, I think it will not be able to compete with the soya DOC, number one. Number two, as far the DDGS market is concerned, though the government is trying to promote this ethanol from the corn, and they have given the special pricing to the ethanol manufactured from the corn, but this was considered when the crude oil prices was at around $80. Now the prices have come down around $60, and if you go some of the experts' opinion, probably it may come down to $55. In that scenario, the ethanol prices given by the government, we have our own reasons to see that can it be sustained in the longer run. So that's a very big question mark. And as everybody is aware that crude oil has fallen down drastically, and it is likely to go down further because of the OPEC's decision. So DDGS has its got on limitation, whereas the soya has got a lot more potential. So we see that coming days are going to be good for this division. Thank you.
Sir, now another big concern is that the tariff negotiation with US, and if they are able to arm twist us to open our imports of chicken leg piece, which is a waste product in US, and we have already lost the case in WTO. So now if that starts coming, the landed price of which would be 60-70 rupees kg, and sir, leg piece is very popular in India unlike US. So I mean, what will happen to us?
This is a hypothetical question, because these are all with the probabilities, what is going to happen and what will happen. So these are all hypothetical discussion. So with regard to current situation, I think we are better poised. Unless and until in actual reality some picture comes in front of us, it's very difficult to comment on this.
Sir, what was the volume growth in the broiler segment, in the soya segment? What was the volume growth? And for this year, what is the expected volume growth in each of our three segments?
In soybean, there has been a degrowth last year because we have undertaken continuous maintenance on our plant. The first half was not that good, so there was a degrowth in the soybean. But this year we are expecting about 25% growth in the soya division.
Okay. Sir, and what about the broiler?
With regard to poultry, lot depends on the realization, but considering the overall placement and volume, we are expecting a growth of close to 5% to 10%, but still it depends on the realization. We are expecting better realization for FY26, and if that goes true, then our expectation is close to 5% to 10% in overall growth.
And sir, animal health?
Thank you. It's Deepak Khosla here. For animal health, what we have seen very consistent performance over the years. And if you see the Q3 of the 23-24 versus 24-25, there's a growth of around 20-21% in the value-wise. And the April month also has been very good. So in the AHP segment, we'll see the very stable performance in the coming months. Yes.
Sir, now if we see that our revenues are back to where they used to be in, let's say, 2019, but our receivable that time was 300 crore and now it is 550 crore. Sir, so basically, and sir, most of this receivable is due to the parent company, and parent company is debt free. Sir, if parent company was deeply in debt, then it was understandable that the subsidiary is having to support the parent. But parent is debt free, and despite that, they are just like taking 6, 8 month, 9 month credit. which doesn't make any sense. Sir, so by when can shareholders expect something? Sir, because the promoters don't even attend the AGM, so then where do we go and where do we get accountability?
Yes, Mr. Garg, in regard to the outstanding related to the group company as well as the external customers, there is a small increase in the customer to the outside external customer also due to the business sluggishness and all. But as far as the group outstanding is concerned, that has come down to the level of 171 crore during this year. 165 crore. Last year, March 24, it was 665 crore, which has come down to the level of 500 crores. So that means there is a inflow of 165 crore outstanding level, which is further will reduce as we progress thereafter. There are different reasons, different business which are interlinked, but there is a decline in the outstanding level, even in the associate also, because associate not only the one product is being sold, there are multiple products, multiple companies are being sold to the from the group company which are interrelated. Thank you.
Thank you.
Thank you. So we request you to rejoin the queue for follow-up questions. The next question is from the line of Kiran, who is from Table Tree Capital. Please go ahead.
I said my questions are with respect to poultry only. The first question, sir, from a poultry perspective, what states account for 80% of revenue? I mean, is it like Uttar Pradesh plus Punjab plus Haryana account for 80% or 70% of our revenue, or is it Rajasthan, Uttar Pradesh, Punjab and Haryana? I mean, if I can just understand, because from what we have done our market research, prices across states vary a lot, both for the broiler and day-old chicks. Maharashtra is very, very different, and Madhya Pradesh is very, very different than Uttar Pradesh. So it will really help all our shareholders to understand what states account for 70% of revenue. I'm not looking for a statewide split. I'm just saying these 3 states or these 4 states account for 70 to 80% of revenue.
Okay. As far as the Venky's is concerned, in regard to the poultry, which is comprises of broiler chicks, layer chicks and ready birds, it is located from Jammu Kashmir to Bihar mainly, and as well as Gujarat if you add. So all these states are having the operation of broiler chicks, day-old chicks, layer chicks, day-old chicks, as well as the ready birds. UP is having an upcoming market wherein production is less, but there is a consumption. So we are placed in almost in every state. Very recently we started in the Jammu Kashmir where we were not having the presence. So we started. Venky's has started the operation of birds and ready birds. Though we were there in the day-old chicks of broiler. But we are trying to be placed in every state wherever so that we can get the margins, average rate realization of all the states wherever our presence is there. So we are having the pack production of broiler chicks, layer chicks, ready bird in all the states starting from Jammu Kashmir, Haryana, Punjab, HP, Rajasthan and UP and even Bihar also. So we are better placed in regard to the business. But if you say UP is a consumption center, may not be a productivity center. Haryana is a productivity center, may not be a consumption center. So different parameters are there, different consumption levels are there to understand the requirement end. But our presence is at all places in terms of productivity, production as well as the marketing. Thank you.
Sir, just a follow-up on that. Sorry. Sir, we have from a poultry division FY25, 1927 crore, right? So let's say 2,000 crore roughly, right? 2,000 crore revenue from poultry division from our facilities for Venky's India in the poultry division, right? 2,000 crore. Now this 2,000 crore is entirely consumption driven, right? Nothing to do with productivity per se. So my simple question is, out of this 2,000 crore, what can I attribute, or what 3-4 states can I attribute 1,500 crore revenue to?
See, our presence is in North India and West India. Roughly, if we want to break this turnover, close to 65 to 70% turnover comes from Northern India, and balance 30 to 35% turnover comes from Western India. So this is a rough bifurcation of the total turnover.
Got it. And when you say Northern India, sir, Rajasthan, Punjab, Haryana, are those the three major states, and Uttar Pradesh consumption is lower, so I'll not consider that. Is that a fair assumption?
Uttar Pradesh also, from our point of view, we are considering as a Northern India operation.
Okay, sir. So that was first question. So second question, sir, then is from a DOC perspective and a broiler perspective, again, basis market research at the end retailer or different market players who are providing market research services as well. They say, look, broiler prices are about 105 to 110 as of today, sir. Again, it's changing every day. 105 to 110, and DOC prices are anywhere between 38 to 40. Last month they were about 45. DOC prices were at 45. Right today it is at 38 to 40. So when it is 45, sir, so April, you mentioned that, April we had about 38 rupees of realization for DOC. And then just talk about DOC only. So April we said it is 38. The prices based on, retail price were about 45. So that's the 7 rupee differential. Is that a fair assumption? Like for today it is 38 rupees, so the realization for Venky's will be 31 rupees. Is that a fair, rough calculation?
When we talk of realization, we talk of actual realization. When you are seeing any rate, those are the declared prices. And the declared prices declared on a different forum can be different. So when we talk of Venky's, this is the actual realization at the end of month. So we are talking on a realization basis, because realization consists of a lot of things, and finally whatever has been realized, that is the actual realization. So 38 rupees for the month of April was the actual realization, though the declared price might be 40 rupees to 42 rupees at a different platform.
Got it, sir. So just that clarity, sir. So today, I know it's not for month of May, but just today, let's say it is 38 rupees as some website publishes 38 rupees. Then our realization might be 32 or 33 rupees or whatever. It is lesser than 38. Is that a fair assumption?
Right. Absolutely.
Okay. Got it, sir. Thank you so much.
Thank you. The next question is from the line of Harsh Shah from Merisis Advisors. Please go ahead.
Yeah. Thanks, sir. Can you hear me?
Yes, we can hear you.
Yeah. Sir, I see a sudden jump in the other expenses. So can you explain what is the reason behind it?
Yes. The other expenses, other miscellaneous expenditure in this year 24-25 is 18.90 crore, which was against previous year it was 17.58 crore. So hardly there is an increase. It is 7% increase over the previous year. Now 18.90 crore, which is then the other miscellaneous expenditure, is mainly on account of the go down expenses for feed. We are having the broiler contract broiler business division, wherein almost 28 branches are located. With each branch, we need to have a go down space for the storage of feed, for so that bird feed can be distributed to the birds and all. And similarly, the other expenditure is also included. There is a list of expenditure which is included there in 18.90 crore. The same was in the previous year also. There is not a major change or major increase thereof.
Okay, because other expenses are degrowing. That's why it just came to my mind. Okay, fair point. Thank you.
Thank you. We will take our next question from the line of Nayan Agrawal, who is from Agility Advisors. Please go ahead.
Hello. Am I audible?
Yes.
So I wanted to know that even though the PAT has been increasing for the past 3 years, there has been a sales degrowth for around 1,000 crores. So what could be the reason for that?
There is no reduction in the turnover to the extent of 1,000 crores. There is a reduction of turnover to the extent of 400 crore. In few segments, we have increased the turnover to the extent of 171 crore on yearly basis, wherein one segment it was 600 crore less. So overall, there is a reduction of 400 to 450 crore turnover over the last year. There is no 1,000 crore reduction in any way.
Okay. And so the next question would be, so like as we in the broiler segment, so you have said that the broiler has been formed after 8 years of R&D. So even after the specialized broiler, and as you said that the feed conversion ratio is reducing, so why has the revenues in poultry segment still flat, and why have we not gained any market share in poultry segment?
Just a moment.
There is a steady increase in the overall revenue of poultry. If you talk of poultry segment for 24, we have reported 1755 CR of poultry turnover. As against this year, we are reporting 1927 crore of poultry turnover. So all put together, there is definitely an increase in overall turnover of poultry. As I said in my previous answer, that a lot depends on the realization, because when we are comparing, I mean, the overall turnover realization impacts a lot for adding or reducing the turnover. So last year, overall realization was to the extent of more or less same with regard to what it was in FY24. So though the realization was flat, but still the turnover has increased to 10%. That indicates that there is an overall growth in poultry sector.
Okay. And so the last question would be from the AHP segment. As you said that the new capex was active from December 24, and the guidance you gave for revenues was approximately 20%, that was 62 crores on that current revenues. So the capex to revenue ratio will still be 1:1, 1:1, or will it increase in FY26?
Yeah, in AHP segment, we have made some investment in the last financial year. And I told you the product started the production from April, May onward of the last financial year. The result of the product production and the new information what we have introduced have seen the effect from the September onwards. And January to March, the last quarter of 24-25 and 23-24, a remarkable improvement has been seen. Yes. And related to capex, I think related to capex, Mr. Handa can answer if anything.
No, the capital expenditure is incurred, but in this year, if you see the AHP segment, the turnover is 339 crore against the previous turnover of 310 crore. So there is a growth of turnover to the extent of 9% over the last year, which is a reasonable number because it is not a full year's number. It is a part of the year's number.
Okay, sir. Thank you.
Thank you. The next question is from the line of Amit Agicha from HG Hawa. Please go ahead.
Good afternoon, sir. Am I audible?
Yeah, you are audible.
Thank you for the opportunity, sir. So my question is with respect to the strategic initiative of capex of 70 crore toward SPF egg expansion. Like how much of the current SPF capacity is utilized, and what is the expected ROI and payback for this project?
So as far as the SPF capacity is concerned, we have a large capacity to the extent of 188 lakh bird placement capacity. But since it is a livestock business and bio-related many issues are there, we are utilizing to the extent of 60-65% productivity out of that, and the same production is being sold. There are a lot of chances and a lot of scope for the export business also, and this year the export business is almost more than double. Last year it was 7 crore something, this year it is almost 20 crore. Export business is also there, and there are a lot of inquiries. So when we start the expansion in the SPF business, it takes almost 2 years to come back to the production. If we start today, it will take 2 years time. So there is a long-term goal, and the capacity also enhanced to the level. So that's why the expansion is there, going on to be there for 70 crore, which will take almost a year's time to complete.
Are you supplying to any vaccine manufacturers?
Yes.
Yes. Our product is mainly to be supplied to the vaccine manufacturers for human as well as the poultry.
And sir, would you be able to give any potential for ready to cook spices that you're venturing into? Any estimated revenue potential?
Yeah, there is a good potential for ready-to-eat chicken products, and we are already supplying to the retail. Then we are supplying to the various institutions and e-commerce. In addition to that, we are also supplying to various quick service restaurant chains.
Spices. Sir, your question is regarding to ready-to-eat chicken or ready-to-cook spices?
Spices.
Spices.
Oh, I'm so sorry. The spices now we will be starting a production shortly, which will be in the next quarter, and we have prepared these products with the understanding that all the these spices will require a minimum intervention at the cooking level, and you need to only add certain oil, some amount of oil, and some certain amount of water for cooking the products. And it will be, the spices will have all the ingredients which is normally required. And these will be all Indian, mostly authentic Indian taste. So we feel that there is good scope for local market as well as export for these products.
Would it be possible for you to give any estimated revenue potential for at least FY26 when you're going to start?
Just a minute.
Right now, it is very difficult to assess because we will be looking for an export market as an initial stage. But once the production starts, we can definitely confirm in after 1 or 2 quarters once the production starts.
Thank you, and all the best for the future.
Thank you. Thank you.
Thank you. The next question is from the line of Pranay Khandelwal from Alpha Invesco. Please go ahead.
Yeah, hi. Thanks for the opportunity. Congratulations on a good set of numbers. This year has been a lot better than the last one, I guess. I wanted to understand this SPF egg expansion, as the previous participant also asked this question. So I'll refrain from repeating that. But you mentioned 180 lakh bird placement capacity. That is before the expansion, right? Like current capacity is that much.
Yes, it is true that the total annual capacity for all the plant is 188 lakh eggs production. I'm taking the egg production. It is the number of birds may be different. Is the egg production 188 lakh capacity?
Okay.
And, yes.
And with the 70 crores expansion that we have planned, how much will we be adding on to that?
There are almost, which we have planned, is the total 6 houses which are going to build up for the placement of birds, which will be likely to be somewhere around 40,000 birds annually.
Okay, and they'll produce close to 100-200 eggs per year, or how does it work?
It is more. It will be more if all the flocks are fully placed with the birds. If the birds are not placed due to biosecurity levels, sometimes shed rate is also necessary. The many biosecurity reasons are there, but the potential is there with us. We can take out the production if the demand comes and all.
Okay. All right. And for the birds, so the chicks we procure from our group company itself, or do we have to go outside to procure these chicks?
No, for SPF line, it's not the bird which you are procuring from in-house. It is a basic grandparent.
These are special lines, and usually it's a research product. And whenever we are talking of any research product, we have some in-house research also, and that produces, and the chicks and those chicks are placed as SPF birds.
Okay, but that is taken up in the group companies, not the listed entity, right?
Yes.
Okay, all right. Yeah, I think that'll be all. Thank you.
Thank you. The next question is from the line of Akhil Parekh from B&K Securities. Please go ahead.
Thanks for the opportunity. I have three questions. One is, if I look at the poultry and poultry product segment, our EBIT for the year has been 100 crore. While if I look at last 5-6 years trend, say FY 17, 18, 19 and 21, we were somewhere around 180 to 280 crore of EBIT. What sort of realization in broiler and DOC we need to cross that 200 crore of EBIT, and maybe probably what kind of RMs in terms of per kg, what needs to be there basically to reach that 200 crore in the poultry? That's my question.
Yeah, with regard to the profitability pertaining to poultry division, lot depends on the ingredient price. If you recollect the profitability of the particular year which you quoted, if you go back to that particular year, you will find that the overall ingredient prices for the particular year was exceptionally low, and that has contributed a lot to the profitability. And from last 3-4 years, there was definitely a crunch on the commodity segment and with regard to particularly soya and maize, because of lot of geopolitical as well as domestic equation. The prices of maize has strengthened a lot. So nowhere the price of maize has come down below 23 rupees, which earlier was quite less. Same was the case with soya. Fortunately, last year was good for soya. This year, with regard to April, also the soya prices were reported subdued and quite comfortable. If that continues, you never know that kind of performance can be repeated, but lot depends on the ingredient price.
Okay. So my second question was the same. Would you be able to guide what kind of trend is expected for soya and maize prices for FY26?
Soya is going to be stable now. The prices have come down drastically, almost by 25 to 30%. We expect that next coming years it will be the stable prices. And maize, it lot depends on the ethanol policy, and which we are likely to see that in next couple of months, the crude oil prices will be coming down, and that will have a major impact on the corn prices, and that we have to see. But the ethanol can have a lot of impact on the pricing of the corn. Thank you.
Okay. And the third and last question in the oil seed segment, I think one of the answers you guys highlighted April was good. And if I look at the EBIT number, right, again for this segment has been close to bottom. So is it fair to say we are at the bottom of the cycle in the oil seed segment, and the EBIT numbers what we saw probably say if not 22, but maybe say FY20, FY21, like 60-70 crore of EBIT level is possible in this year, or what could restrict the profitability in the oil seed segment for this year? Yeah, that's all from me.
Yes. Now the beginning has been good because more or less the soya market is stabilized. Now you see, this is the commodity market. The profit comes from the two segments. One is the normal conversion charges from soybean to commodity. That margin is very low, and major profit is stock valuations. When you buy the material in advance and then process it at a later stage, you are able to take the advantage of the market. So that profit is significant in the commodity market. Right now, we do not see that kind of a situation happening because prices are more or less stable, and we do not see any kind of speculation happening at this place unless until some natural thing happens. So we can expect a good profitability, definitely, but not the highest what we had achieved in the past. But profitability has been improving, and this is the bottom we can expect what has been this year.
Okay, great. So that's all from my side, and wishing best of luck in your coming quarters.
Thank you. We will take our next question from the line of Madhur Rathi from Counter Cyclic Investments. Please go ahead.
Hi. Sir, thank you for the opportunity. Sir, if I look at our poultry segment versus our competitor, EBS Exports, sir, they have grown their revenue at 20% YOY from 2020 to 2025. And they source their chick from AVSN. So is there an issue where AVSN has become more aggressive in placing their chicks in the market? That's why we are losing our share to our competitors?
Yeah. With regard to poultry and comparison with our competitor, there are two basic prominent differences. One is that when you are talking of Venky's India Limited, it is having operation pertaining to two zones, that is West Zone and North Zone. With regard to the comparison, what you did, they are having a presence all over India. Secondly, when you are talking of Venky's, you can see the portfolio of Venky's. Venky's portfolio is completely well balanced. So we are not going alone in a poultry because we have total 3 to 4 segments in Venky's, out of which one is a poultry. And if you see the breakup of poultry vis-a-vis other segments of Venky's India Limited, poultry contributes close to 45% to 50%. So when you are talking of Venky's, we are talking of only 45 to 50%. Rest 55 to 50% comes from other divisions, that is soya as well as AHP. So we believe in balancing of the portfolio, and Venky's portfolio is balanced, whereas the company which you are comparing, they are exclusively into poultry. I hope I have answered your question.
Right, sir. But if I remove the geographical factor, sure, sir, their revenue has grown up by 2x, more than 2x in the 5-year period, but our revenue has grown from 1,500 crores in 2020 to 2,000 crores in 2025. Sir, so that is at a much lower growth rate than what the competitor has done. So overall, if I consider the chick placement that Venky's India has versus our competitor, sir, has our parent company lost market share? That's why we are facing a slower growth, volume growth than what our competitors are.
Numbers are different in the statement. As far as overall placement is concerned, when we talk of a breeder placement all over India basis, breeder placement of Vencob vis-a-vis competitor, that comes to 80 to 85% is of Vencob and close to 15 to 20% is of competitor, of which IB is one of the competitors, and they are placing it all over India. Whereas as far as Venky's is concerned, as you rightly said, that we are having placement only in 2 regions, that is West Zone and Northern India. But if you are talking of overall growth, poultry is growing to the tune of 8% to 10%, and we are matching that pace as far as overall growth of poultry is concerned, overall put together.
Okay, got it. Sir, in our animal health segment, sir, what would be the optimum revenue potential for the segment? And sir, can we expect the 20% growth to continue for the next 3-4 years?
Yeah, actually what happened is we have seen the last quarter of 24-25, which I mentioned, as compared to 23-24. The last quarter is in the same direction, and April has been very good. We are very optimistic on animal health performance in the coming year. With the new plant is now fully commissioned, and the capacity definitely has improved, and all the regulatory clearances, compliances has been there. It will be very consistent and a very respectable growth in the coming years. I can assure you. Thank you.
Sir, so what is the revenue potential of this capacity and capacity utilization currently?
Yeah, definitely. What happened with the new facility what we have made, it is now at the around 55 to 60% level of the capacity utilization. And we have started exploring some new product line from that division. This will definitely add to the volumes. Yes, please.
Well, sir, just a final question, sir. Are there, sir, I think we commissioned one solid plant and one liquid plant. Sir, so is there any possibility of margin improvement in this segment going forward?
Yes, definitely, because the first year it was a commissioning of the plant. Definitely margin will be very stabilized and very positive. Yes.
Okay. Thank you, sir, and all the best.
Thank you.
Thank you. We will take our next question from the line of Vanit Singh from Counter Cyclic PMS. Please go ahead.
Hi, sir. My questions have been answered, but I would like to understand. We saw significant fall in margins specifically in the poultry segment in Q4 from about EBITDA from about 38 CR to about 4 CR. So, I mean, I would like to understand the impact of Kumbh in this. So, I mean, can you quantify what kind of can you quantify how much fall in EBITDA can be directly attributed to lower consumption due to Kumbh in Q4?
So during the Kumbh period, it was having the effect on almost all the segments in the different states. Though the Kumbh was there in the UP only, but transportation, logistics, movement of goods, movement of raw materials, movement of finished products has affected a lot. Due to that, a lot of realization has got affected, particularly in February and March. That has impacted the last quarter. Otherwise, there is no reason because the numbers were having a pack. We were having the production, the day-old chicks, broiler chicks, day-old chicks as well as the birds. But due to the prices were not behaving well the way it was expected due to all these numbers, all these reasons, maybe of transportation, movement, freely movement of goods, and so all those things are affected ultimately, which has after Kumbh, those things are improved. Though there 1 or 2 weeks was sluggish because the material was jammed kind of thing, but now April is also a very positive month. Even the current period is also a positive month, which due to the Kumbh, those things are already over. Thank you.
All right, sir. So, I mean, our EBITDA fell from about, in the poultry segment, 38 CR to about 4 CR. So, I mean, had there been no Kumbh or a normal Q4, I mean, if we put aside the effects of Kumbh, would we be seeing about similar EBITDA as last year in the poultry segment?
To some extent, yes. I mean, it's very difficult to comment whether it would have compensated that 34 of the last previous quarter or not, but definitely it would have been added what it is.
All right, sir. Got it. Thank you.
Thank you. The next question is from the line of Ankit Gada, who is an investor. Please go ahead.
Yeah, thanks for the opportunity. First of all, I would like the revenue breakup for the poultry segment for FY25 and comparative figures for FY24 for grown-up boilers, day-old chicks, and processed chicken.
As far as the volume is concerned, in the poultry segment, we were having the broiler day-old chicks. It is sold 10.77 crores against corresponding period of 23-24. It was 10.78 crores. Chicks, day-old chicks. Similarly, the layer chicks, day-old chicks, it is sold 4.38 crores in 24-25, and in the last year it is 4.32 crores in 23-24. And same way the broiler birds, it was 9.17 crore kg in 24-25, whereas in the previous year it was 8.83 crores. And similarly for the SPF eggs, it was 91 lakh in this year as well as the 91 lakh in the previous year. So broiler hatching eggs, it was 9 lakhs sold in this year, whereas 23 lakhs was sold in the previous year. Layer hatchings, it was sold 29 lakhs this year, whereas the last year it was 32 lakhs eggs were sold. So these are the poultry numbers, volume based last year versus this year.
And I just wanted to ask, like the ready to eat and ready to cook revenues are included in the processed chicken revenue, so like it's different.
Yes. It is included in the poultry and poultry segment.
So could you just quantify those numbers for me for ready to eat segment?
For processed chicken, it is 110.27 lakh kgs in this year 24-25, whereas it was last year it was 61.37 lakh kg in 23-24. But there is a product mix difference. Is the live bird sales in this year, whereas other than this product mix is different in the earlier year.
And the revenue for the same for processed chicken?
That will be published in the balance sheet. We don't have the numbers now.
So I just wanted to ask In the ready-to-eat and ready-to-cook segment, we had some marketing spends budget that was going to increase for the last 2 quarters, Q3 and Q4. Could you just quantify the number? And for this year, what's the guidance for the marketing spend?
We don't have the numbers now. You can email us. We'll provide that.
And I just wanted to know a marketing strategy for the ready-to-eat and ready-to-cook segment, because right now, since the last 2 quarters, we have been aggressive in the quick commerce and e-commerce. Any growth in percentage terms you can quantify, and like how aggressive are we in that segment, and what numbers do we wish to have in the next 3 to 5 years?
Actually, in process food division, we have 3 sectors where we market. One sector is supply to the quick service restaurant chains, and this quick service restaurant chain supply is increasing on a regular basis. So that is one sector which we are supplying. Another sector is retail market, what we were marketing in a modern trade or regional modern trade or general trade. But last 2 years, there is an emerging trend that e-commerce is increased substantially, and there is a lot of close down of certain modern trade chains. And with that, and post-COVID also, we experienced that a lot of consumers are looking for the e-commerce chain for the supply of the products. So definitely we had concentrated our efforts for marketing our products to e-commerce sector, and that sector is now improving on a regular basis. We expect an increase in our sales for this sector to more than 25 to 30% in next year compared to this year.
Okay, 25-30% of ready-to-eat and ready-to-cook for the retail segment, right? And as a brand, because
retail, this includes retail segment also for the quick service restaurant chain, both the sectors. But yes, the growth will be this much.
And the current pie in the total revenue would be for these 2 segments?
We will percentage. Tell me again.
The current percentage for the total revenue of poultry segment would be for these 2 segments. Any particular number, not accurate, just approximate number would be 5.
It would be 5 to 10%.
Yeah, it's around 10%.
10% for the total poultry segment, right? So